SBI Life delivered a soft set of Q2 earnings. The company's VNB margin contracted to 26.9%, while its new business premium also fell 13% on a year-on-year basis. APE growth for the company, however, came in line with estimates. My colleague Yash Jain caught up with Amit Jhingran, the MD and CEO at SBI Life Insurance, to discuss their Q2 earnings as well as outlook for the second half of the year. Listen in.
If we talk about the APE growth, I will again say that the first year growth at 9% was a little below our expectation, and in the second half we have given that for the full year we would like to close the year with a 15% growth in the individual segment.
Okay.
The pain that is coming from is basically on the group business front, and that is as per our strategy, because the yields in the market have fallen down during the first half year, and some of the competitors are quoting very strong rates. I would emphasize that we will not be booking any business which is profit negative for the company.
If 15% is the growth that you're guiding for individual APE, at this point of time at least, with that 15% individual APE growth, could the total APE growth be about 200 basis points lower, because that's been the difference for total APE for FY25?
It will depend on how the group business pans out in the second half also, the total APE number.
What you had guided for as far as VNB growth is concerned is a 15% growth on the VNB side. What I want to understand is that do you still stick to that VNB guidance of 15% growth for FY25? Because then you have a very, very tall ask in the second half with just about 3% growth in your hands or 2% growth in your hands in the first half. What can we expect in terms of the VNB growth for FY25 and H2?
So VNB growth, as you already said, depends a lot on the product mix also. We are seeing that ULIPs are flavor of the market.
Correct.
The entire industry, the growth is coming basically from ULIP. In the second half, we expect good growth numbers to come from the protection product, which will be margin accretive also.
Correct.
So based on that, we will definitely be improving on the VONB growth also.
Okay. And that could be in the range of 13 to 15%. Is that estimation correct?
It should, yeah.
Okay. Protection and annuity from 11 and 15%. Could we get an increment of about 500 basis points in terms of the share simply in the current financial year with the product launches that are lined up at least? Not a specific number, but a 300 to 500 basis points addition in the share of protection and annuity. Is that possible?
Protection in the IRP basis in the first half was around 8% on the individual side, and that was because we were going to launch new products, and that is why we were slightly slow on the existing products.
Correct.
These products have been launched in the last quarter at the towards fag end. And we are getting some very good numbers, like the product on the YONO platform has already clocked more than 33,000 policies in less than a month. So although the premium here is lower, but we expect to play on the volumes and the large customer base of the State Bank as well as on the YONO platform.
Correct.
We expect this number to substantially go up.
Under what level on ULIP would you be comfortable? So HDFC Life, one of your competitors, very clearly said sub 30% on ULIP and will be comfortable to continue under that bracket. They've reached about under 35%, sub 30% they'll be comfortable. What would be that number for you that you'd be comfortable and happy with?
We have always been a ULIP heavy company for last 4-5 years.
Correct.
So we are, and even that our margin are much higher than our competitors. That is because of the unique kind of cost structure and our expenses structure, our commission structure. There are so many things at play which lead to better margins to SBI Life despite selling a higher number of ULIP. So I am not as uncomfortable as maybe our competitors are.
What should be the new guidance that the street would work with as far as VNB margin is concerned? And how confident do you look at this point of time to be able to achieve that?
I think we should be able to maintain that 26-27% kind of margin with a positive bias.
Okay, so down about 100 basis points from the earlier guided, but 26 to 27% is the comfortable range that you'll be able to achieve. Your total protection premium in the first half was down about 14%, where individual premium was down 25% and group premium was down about 11%. Let's single this out on one side. Let's look at H2. Growth, yes or no? Positive growth. If yes, then what is the number that you're looking at on the protection side, and under that individual and group?
Positive growth definitely should come on the back of these products, and on the credit life side also, like you were talking about group. Yes. Credit life, again, we have simplified the processes, eased the underwriting standards, and a much higher sum assured can also be taken without medicals and all. So that limit is also being increased. So there should be some accretion, positive growth coming on the credit life front also. So I would not put a number to the growth, but definitely a positive growth in the second half.
But your protection premium, as I said, in the first half is down 14%, annuity premium is down 17%. Would the growth be enough to take the overall FY25 numbers in the positive territory?
Yes, protection, I am very sure that it will be positive.
Right, that is the word coming in from SBI Life. By the way, HP